Recording in progress. Remember, once the video is uploaded on YouTube, please, I urge you to just go there and subscribe to the channel, and also give a thumbs up to the video, and also make a comment if you do appreciate or if you've got a question on that video. It helps with algorithm, of YouTube. Otherwise, let's just get on tonight's session. A lot of people, obviously, have mentioned before, we call this a millionaire intelligence institute. Our aim is to educate, empower, and enrich. So those are where you can basically contact me: Instagram, Twitter, call, or WhatsApp, or that's the email address. Okay. Just a little bit of if background, about Millionaires Intelligence Institute. It's founded by entrepreneurs, traders, wealth coaches, and the company mission is focusing on educating the masses on the power of the financial markets and also passive income, and providing the platform to make sure that everyone achieve financial freedom. That is basically our aim. Just giving a bit of a background, because sometimes we always going to be focusing on the charts, on the graph, on the signal. We don't really have a talk about the mental fitness that is required for you to be consistent in the game. Because tonight's session, we call it a trade zone. We call it trading in the zone, mastering it. That's basically what we are calling tonight's session. Okay. Welcome, Tabiso. Just join us. We've got Ayanda and Gubego. Welcome. Yeah. So, as we mentioned before, our focus is founded by entrepreneurs, traders, wealth coaches. We are focused on educating the masses in terms of the financial markets and also passive income. Just a little bit of background, for Monday to Friday. In the morning, I'm mostly on radio. I'm doing the breakfast show there, Monday to Friday, 6 to 9. But around about 7:30, I talk about financial markets education. Because that is very important. Very important to understand that education is important. Understanding what you are doing is very important. Even the doing research on it. So I'm on radio Monday to Friday, 6 to 9. I'm doing a breakfast, and around 7:30, that's where our focus is on the financial market. So we talk about finance, we talk about share investing, we talk about saving. We also about we talk about share investing, forex trading, the importance of having savings, insurance, different things. And just a bit of background, I'm also studied, I went to school, I've studied engineering, I did that. I have a lot of business experience, doing different businesses. I've been to Bible college where to learn about, spiritual life in terms of my purpose, vision, being very fit mentally. And also, we also had an office in 320 around 2014, 2015, 2016. I think until 2017, we were having an office right there in 320 office in Durban, where we are focusing mainly on trading and cryptocurrencies and also share investing. That's around 2015, 2014, and until 2017. And then we obviously had to move to Mhlanga around 2018. I probably have met a lot of people that are in the group, while when we were there at 320. Probably have met a lot of people in the group that were there in 320. We're running that office. So one has a bit of experience even in network marketing. I've met a couple of leaders in the world of network marketing. Otherwise, what is important also is that treating forex forex as another income stream. Okay, that is very key. You can have basically that. I keep saying that education first, and then I think there was a bit of editing error. Then money will follow. Focus on educating. Focus on improving your skill. You can have a full-time job or a full-time business, or a full-time or become a full-time trader. Before, a lot of people used to sell us dreams, that we're going to become millionaires overnight, over months, over weeks, you know. But it has, over a period of time, you learn to understand that this is actually another income stream. You can be a full-time worker while you are trading, on the side, while you're holding your position, while you've got your shares, you've got your crypto that you are trading. For example, in a day, if you're trading in a day and you're making 200 a day, you can basically push to have an income of 1,000 Rand a week. That is going to be 4,000 Rand a month. Over a first year, you've made over 48,000 Rand on just another income stream. After a period of 3 years, if you are consistent in terms of doing this, obviously you're going to make 144,000 Rand. If you're making about 500 Rand a day over a week, it's going to be 2,500 Rand. It's about 10,000 Rand a month. After a first year, it's going to be 120,000 Rand. This is thinking of Forex as another income stream. Okay. After a period of 3 years of you making 120,000 Rand, you talk about 360,000 Rand within a period of 3 years. Because we need to think long term while we are operating and having good habits on daily basis. If you're making 3,000 Rand a day, we're talking about 15,000 Rand a week, 60,000 Rand a month. It's about 720,000 Rand a year. That is one property, is one good house, that you can buy, or your apartment. Is up to you, what you do with your money. What is important is having a skill and knowledge how to go about it and having a bigger vision and a bigger picture. Obviously, in a period of 3 years, you doing this, you can have over 2,160,000 Rand. If you are actually have a bit of a more skillful traders, obviously there is right now this is about $1,000. You think it's a lot of money in rands, but this is about $1,000 a day, which is 20,000 Rand a week. It's over 80,000 Rand a month. We're talking about making about 320,000 Rand. It's almost over half of a million. No, half quarter of a million. And then over a first year, obviously, you doing this, we are talking about you're pushing over 3,840,000 Rand. So this get very close to about 4 million. With a 4 million Rand, you can basically get a good farm, good piece of land. You can also get a good property. You can also, even if you're getting 10% a year from this, it's over close to 10% a year from 4 million is about 400,000 Rand. Yes, 400,000 Rand. It's good money that you're getting from a savings account. You can leave off 400,000 Rand a year. Also, 4 million Rand, you can definitely buy some farm. You can also buy some. The reason I'm talking about this, I'm talking about assets, things that will bring you more income, because the aim, some of the people that are they use trading as a way of generating an income or like a capital to push into other stream of income that will give them passive income. Then over a period of 3 years, obviously you can make about 11,520,000 Rand. This is just a breakdown, and you must think of Forex as an income stream. But for you, before it can become an income, you must have what you call education. Education first, and money will follow. Without education and a skill set, obviously, you will not reach a point where you are making consistent income. That's very key, it's very important. Remember, tonight we said we're going to be talking about trading in the zone. A lot of people can learn technical skill, they can learn fundamental skill, but very few people can learn what I call a mental skills. Mental skill is for you to understand how prepared you should be mentally as a trader. What is your thinking capacity? What is your perception about the market? Remember, these are 5 fundamental truths on trading in the zone that are on that book. Okay. Understand that anything can happen at any time. There's no guarantee in trading. Basically, that is very important and key to understand. But also understand that you don't know what is going to happen next to make money. Meaning this is supposed to say you don't need to know what is going to happen next to make money. For example, you can click buy and make profits. You can click sell and make profits. You can click hold and make profits. You can click hold and make profits. You can click buy and make profits. You can click sell and make profits. You can click hold and make profits. You can click buy and make profits. You can click sell and make profits. You can click hold and make profits. You can click buy and make profits. You can click hold and make profits. You can click sell and make profits. You can click hold and make profits. You can click buy and make profits. You can click sell and make profits. You can click hold and make profits. You can click buy and make profits. You can click sell and make profits. You can click hold and make profits. You can click buy and make profits. You can click sell and make profits. You can click hold and make profits. You can click buy and make profits. You can click sell and make profits. You can click hold and make profits. You can click buy and make profits. You can click sell and make profits. You can click hold and make profits. You can click buy and make profits. You can click sell and make profits. You can click hold and make profits. You can click buy and make profits. You can click sell and make prof and you don't even know what you're doing. You know, you can click sell and you make your profits, by clicking a buy or a sell, because uh, trading can either go up or go down. It's one go up or go down. Even somebody who don't even know what they're doing, they can still make money, because you do not need to know what is going to happen next for you to make money. You just need to click a button which is buy or sell. And if you click buy and the market does actually go up, you're gonna make a profit. If you click sell and it does drop, you're gonna make money. Problem is, winning and making profits is not the same thing as being consistent in terms of winning. Okay, those are two different things, and you need to have a different, very different mindset for you to be consistent. And then remember, truth number three is a random distribution between wins and losses for any given set of variables that define an edge. Okay, what this means is, when you have a strategy, you've got a strategy that you're using to trade, and understand sometimes you're going to place a trade using a same pattern, same analysis, and it's going to be a profit. Again, you see the same pattern maybe on another pair. Let's say you are trading USD ZAR. You see a pattern, you trade it, you make a profit. You see the same pattern on USD CHF, and what happened is it doesn't go in profits as much as the same pattern, but doesn't go the same way. Why is that? Is because everything in the market, every situation is different. Okay? Every situation is different. You can take about 10 trades. Maybe in the series of 10 trades, about 7 of those trades become profits, and 3 of them become a loss. That means you've got a 70% winning ratio. But now out of the 10 trades you are taking, you don't know which other one are going to be a profit, which one are going to be loss, but you just know in a sample of 10, you're going to make a 70% winning ratio based on your strategy. What is the key is that treat every trade different. Make sure you always apply proper risk management, because as much as the pattern can be the same, everything will look the same, but each situation is different. Okay. An edge is nothing more than an indication of a higher probability of one thing over another. An edge is basically understanding that even your strategy is used to find a high probability in every trade. So with your strategy, basically what you're looking for, you're doing analysis uh, just so you can find a trade, you can find a place of entry whereby you know that at this level, I'm gonna be getting I'm gonna be making more profits. There are higher probability for me to make a profit on this stage or on this trade. And the reason I'm saying this is because a lot of time, most traders, they focus more on understanding the technical side of trading and the fundamental side of trading. Very few, they want to master the psychology of trading, the mentality of trading. Because as much as you are given a strategy, you're gonna need to have a mental fitness for you to execute that strategy. You can teach someone how to use let's just say to drive a car, and they can use that car in a productive way, and they can use that car in a damaging way. They can teach somebody how to maybe cook food, and there are so many things, so many examples that you can use, that having a skill and having an understanding of something is one thing than having a mentality of actually executing that thing. I think if you understand soccer, I think we were watching, a lot of people were talking about Arsenal, they're gonna be winning the league. Sorry if you are Arsenal, if you're an Arsenal supporter, even but looking at teams like your Manchester City, they've got the mentality, they've got the winning attitude, they've got the thinking that they know with what they have, skill sets and experience, they're able to be consistent in winning, because they've got a strategy in place, they've got a tactic that they use. But more important than the techniques is having a psychology to implement. We can teach you the strategy, we can show you how to market chart, but now having to wait for the market to come to you, having to wait for the market to reach a level whereby you do not turn a winning trade to be a winning trade to be a losing trade, because you don't know how to cut your losses early, and you don't want to cut them in losses, because you really want to prove that you are right. My analysis was right. I was right. I'm not wrong. Everyone is wrong, and I'm right. Sometimes you must understand that the market is always right, and if you keep going against it, it's gonna show you that the market is right, and you are definitely not in line with it. The aim is for you to be in line with the market maker. The aim is to be in line with the institution, so that you can make money consistently as you're doing. Remember, when you are buying, okay, point number five is every moment in the market is unique. Okay, you can see the same structure, same pattern, but everything is unique. Tonight, we're going to be focusing more, as much as we're going to be doing analysis, but our focus mainly is on understanding mental skills. Understanding mental skills is very important as a trader. Trading is definitely 20%. You can teach people skills. There's so many companies out there that have got people that can do certain jobs. You can teach people how to drive a car. You can teach people, but when you go on the road, you see people how they're driving. You can tell these people. It's a peak hour. They're rushing. Even when there's traffic, they're panicking. They're doing all things. It's because of their attitude, because of how they think, how they move. That's basically just a basic level of a mental skill, attitude. You can teach somebody how to program, you can teach somebody how to design an AI, but mental skills are totally different. Otherwise, know your high probability setup is another thing. This is a technical skill you must master. But now, for you to execute the technical skill, you need to have a mental skill, you need to have patience, you need to have understanding. So when you talk about what is a setup is one of the instruction or price action that can be seen clearly in the charts on your MT4. Okay. Setup can also be a signal for a market direction, whether you're gonna buy or you are going to sell. It gives us confidence for entry. That's very important. A confidence for you to enter. You know, for an entry, because every entry in trading is risky. Okay. The reason I'm saying that every entry is risky is because you can whatever entry you are placing, understand that it can be a loss, it can be a profit. So you must make sure you always use risk management using the right lot size. Sometimes I've noticed that you can have understanding of the strategy. You look at your analysis, you're like, I was right. But now I entered so many position, I was running so many trades, I used very big lots. Even though I was right with my analysis, but my account is gone. Why is your account gone? Is because number one, you were not understanding your risk, you did not even use proper risk management, and you were not even understanding that every entry, as much as the pattern can be the same, that every situation is unique. So that is very key. And accepting the risk, it means if you are trading an account that is of 10,000 US dollars and you're taking a trade at 0.10, your stop loss is 100 pips, you are saying that you are willing to use $100, you know, meaning when you click buy or sell, you must just be free. No matter what happens to that $100, you are gonna be fine. You're gonna be fine emotionally, you're gonna be fine mentally, you're gonna be fine even to place even the next trade. Because you cannot risk it all in one trade, and you cannot even have your whole faith, in one trade. So it's very important, must be So risky must be considered. Trading is a high risk business. So how can we reduce the risk of this loss is to wait for the setup to take place. So the best way obviously is just wait up, because trading is a risk business. Understand that high risk also means high reward. That's very key. So the reason you have to wait for the setup, waiting for the setup and doing the analysis are two different things. A lot of people can do the analysis, a lot of people will see the signal, but the waiting part, not everyone can do. And also the part of actually waiting for the entry, even after you've taken a trade, you're already in profit. The point of taking partial profits, people will think, yo, with this money, I can do one, two, and three. They are already calculating on the profit that is running. They have not closed it. It's not even in a bank account. It's on the broker's platform, and they're already calculating what they can do. If there's a loss, some people already panicking. They are panicking, thinking all sort of negative things because they see a loss. Especially after someone has seen maybe 5 losses in a row, they're already panicking. And without knowing that after those 5 losses, they're gonna have maybe 20 profitable trade in a row. They don't know, because in the market, the wins and the losses are very random, but because of a strategy, the sample of a certain number of trades will definitely give you a profit if you've got a very good strategy. Okay, there are many configurations we can use for entry, obviously, but we're going to be focusing on a very simple setup. Okay, so just to go on this, a signal confirmation for entry. This confirmation signal is used to ensure traders are still in the learning process. Very useful in trading because it controls emotions and also keeps your trading account from rush entries. Very important not to rush your entry. Not rushing your entry is not a technical skill, it's a mental skill. It's a mental issue. It's how you think. It's how so that you won't rush into getting into a trade until you see a setup in the place. If you cannot wait, sometimes you can always place pending order. Place a pending order and wait for the market to come to you. It will definitely come. If you miss a trade, it's okay. There will be another trade. You get another opportunity. The market will give you thousands of opportunity every day, every session. It's not the end of the world because we are thinking long term. Thinking long term is another skill, mental skill. Okay, so number one, momentum price is getting slower when getting to the entry zone. So once that's seeing that, understand that now maybe it is the time for me to enter a trade, and then price makes a lot of rejection in a smaller time frame, meaning you're going to be looking at the higher time frame, your H4, your daily, and you see that now the price is getting closer. But now when you go to the smaller time frame, your M15, your H1, maybe sometimes even your M5, you see a lot of rejections, and then you're like, now it's time for me to enter. The candlestick reversal signal pattern forms in a small time frame. So basically, you're gonna be looking at the smaller time frame. You're like, you know what? Now it's time for me to enter. So let's just go over the chart so that we have a bit of understanding what we are talking about within the chart. Oh, firstly, let's check out what happened today in terms of fundamentals. The reason we're doing this is just for people. Okay, today the interest rate decision around 3 o'clock, we saw that the rand currently right now interest rate decision is 8.25. Last year it was 7.8. Right now it's 8.25. That is a repo rate. It's very high. So the prime trading day is at 11.80. Yo, that's a lot. So basically, the interest rate decision was raised by over 50 basis points. It's a lot to take in. Otherwise, we saw the initial job claims in the USA. It dropped from expectation was 250K, but the drop is on 229K, which is good for the US. Meaning if it's dropping, it means less people are claiming money for because they don't have work, so which is good. And then looking at what other things we were looking today, I think this was the GDP. So GDP in the USA 1.3. That is its growth in the USA in terms of the economy, so which is good. So that's why you're gonna see some positive numbers in terms of USA. I think also Nasdaq just pushed a bit higher, and that's why I was analyzing. I was looking, expecting even some upward movement in US 30. And also I think I saw some earnings today on I think this was the other company. I'll share with you later on WhatsApp. But I saw the numbers were very good, so I like the numbers. I think also what else we saw today in terms of the number. Oh, the German GDP, you can see minus 0.3. This is the first quarter. And you can see that obviously even the euro, it just showed that on the chart. There was a drop across the eurozone. Otherwise, let's just go over the charts, the technical side, because we know fundamentals are just an instrument that I use to push. Look at that. The rand, it's 19 point, close to 20 rand. And it's just the highest high. Let me see. Yeah, there was a new high for the rand. And basically, number one, there's talks on the US dollar ceiling, US dollars debt ceiling. I'm pretty sure this still gonna drop. I'm pretty sure this still gonna drop. Okay, what do I mean? So this is a higher time frame, right? So when you see a pullback, waiting, let's say you've got a sell, right? Yeah, you've got a sell trade that is running from here, from this level, you know, from this level to that level over there, right? You got a sell that you can hold, okay? So now you've done the analysis, right? You've done the analysis, but now waiting, waiting for this to come to drop from there to there, it's a mental issue. You've done the analysis, you can see it's gonna drop, but waiting, can you wait? Can you wait? Are you able to wait? The answer is for a lot of people, no. Why? Because it's not a technical issue, it's a mental issue. Waiting, it's a mental issue. Sometimes, I don't know why it's doing that now. So you wanna wait from here, okay? Otherwise, you've seen this, you've done the technical side of analyzing, right? Now you need to wait for it to go from there to there. It's an issue mentally, from there, that drop. See how many pips, how much money you can make. You've done analysis. Technical wise, you are good. So learn this thing of being patient. Do not attach it to. Let this be a system of being automated, knowing that from there to there is going to come there. Remember, like I keep saying this, you've done the analysis part, technical side. Now have patience. Let this understand, let the market move. Understand, number one, you're not in charge of moving the market, you cannot move it. You can only place a trade and react to it. Your job is to react, Even if you've done analysis that this is gonna drop and it doesn't drop, it's fine. You get another opportunity. Sometimes you say from here it's gonna go up and it doesn't really go up and you just decide to go down instead of going up. Yes, you can say I was wrong. No, no, no. It's not about being right or wrong. It's about your analysis did not play out. It's okay. It happens in the market. And obviously each situation is different. So each situation can give you a profit, can give you a loss. As long as your winning ratio is good and your risk management is good, you will definitely make money long term. The aim is to make sure you treat trading as a business, you treat trading as another source of income so that it can give you consistent income. You've done analysis on this. Remember, right now, the USD is going up in flame. I think you've done analysis even on gold. You've done analysis on gold this week. Even shared some signals on gold. Uh, you know, so as you can see, the USD is pushing up. So expectation on gold as per analysis was this. Okay, I'm talking technical now. Okay, so let's see technical. I strongly believe that gold is gonna push very high up. Okay, it's gonna surpass that highest point. So what I'll do is I normally switch. I mark the low and I mark the high. See, just do that. This is the high and this is the middle, right? High. This is the low. That's the high. So what I will do normally, I'll take the Fibonacci. This is what I call technical skill. Okay, and I can see from there, from my thing, right now, which is between 50 and 60, okay? It is between and 60 and 50 of the Fibonacci, okay? It's a key level, and you can see even right there, it was previous, this is something you can call it. This year, let me just call that, let's just call, let's just call that, it's just called first time back for first time back to the zone for this is first time. So now the price is coming back to the zone, okay? What I'm expecting is between 50 and 60 of the Fibonacci. I'm expecting it. When I go deeper into it, you can see this is the candle that is important. This is the beginning of a bullish move. It's right here, right? So even right there where the edge is still between 50 and 60, I can still expect it, the price to go up there, okay? Now I need to go to a smaller time frame to see what is going on in a smaller time frame. Looking at that, you can see there was what you call this year is basically trapping traders both ways, buyers and sellers, and breaking towards the low. And you can see it broke below those level over there on the left, okay? So it broke below that level, which is then you can see touch this level, touch this level. Remember, if you are trading, what you consider, remember the main thing is buying low and selling high. So it touched this level. What you perceive as a low, someone else looking at the same thing, they think it's a high. Remember, touch this level again, went up, touch this level once again. Once the price has been 1, 2, 3, touch a level 3 times, that level is now very weak. I don't want to, when it comes back for the, I don't know, this is like a fourth time, 1, 2, 3, is a fourth time in the same level. Just know it's going to break below that level. So hence it broke below that level. I kept saying, if people see this 1, 2, 3 as a low, and you see it's not a low, it's still high, definitely the price is going to drop below it. But obviously, like I kept saying, what we think is a low, someone else think is a high. When the market obviously see there's a lot of liquidity in that area, it will definitely move below it or above it. Okay, it's all about understanding technical and mental game. So now you can see the market has dropped below this level. Okay, let me show you that. Yeah. Yes, we're gonna close the session very soon. I think on a Saturday, see that's basically a level. One is drop below that level, then come back here on the 50. I think it's gonna react on the 50. And obviously the main position that I like is this one. If I can get a buy here, we're good. Also, I think here it's still a perfect and nice buy. You can see even here the price is already starting to move, especially after that huge drop. And you can see that obviously that huge drop was caused by the dollar moving up. Let me just show you what I mean by when I said the Nasdaq actually moved like very aggressive high. Let's just do that. Remember, this is what we call it technical, right? We did analyze technical, but the waiting part is the one where we say it's mental. Mental. Okay, you can see. Should point out the reaction on this. So the market dropped towards this zone. Let's go on the 4-hour because we want to see where was the reaction. And you can see right here, that's where you got the reaction from of Nasdaq. Okay. And we did analyze this drop. We did expect that drop to happen because we're like, we can see this here. This here is liquidity. So the market is going to drop below that zone. But now, if you've got a sell here and you miss that sell and it's still the market is here, waiting, the power of waiting, maybe the profit here is still like 1,000 or 2,000, maybe you're holding a trade, and then you still drop to this level, and the profit now is over 3,000. When it gets here, the profit is like maybe you're trading 0.01 is over 4,000. That waiting for it to get here, you just need to understand, put your stop loss, number one, put your stop loss, break even. Yeah. You pre okay. Oh, we'll just run up a time. Okay, what I will do, I'll do a video tomorrow, and I'll do a video and upload it on YouTube. Okay, that's what I will do about Nasdaq and USD. I think let's just close the session here. Okay, if you've got any question, let's just send them on WhatsApp, and then on Saturday we do another session where we just cover only questions. Okay, any question for this week, and then we'll do a session on this. I think we're still expecting USD to move up.